Hello guys, welcome to my YouTube channel once again, and like I promised you that I will constantly be uploading a useful content that will assist you in your trading career. So subscribe to my YouTube channel if you have not subscribed, so that whenever I upload the contents you will get the notifications. So like I told you in the previous video, that I will be teaching you how relative strength index indicator works together with the multiple moving average indicators. So before we continue, let me show you what I did today with the same strategy which I taught you in the last video. As you can see, it's very safe. Like I told you, Forex is all about patience and of course using proper risk management. So once you do, trust me, you enjoy your trading. And let's go to the F key and deactivate the relative strength index which I have here, and of course apply it again in order to make you understand the process. Deleted. You can see the how the chart looks, just like the previous content which I uploaded. So if you want to really understand this video, you have to go watch the previous video, which of course I will attach the link in the comment section, so that you'll be able to watch the previous video and of course know more about this in order to understand this very video, because the previous one has the basic content. This is just a bit advanced level of it. So let's go to F key and apply the relative strength index again. Select the relative strength index. So here you leave the period to 14, apply close, and of course I used to like the bigger version, so I selected the third peso. Then the color, you can select any color of your choice. Then the level here, so you will have to type in 20, 30, 50, 70 and 80 numbers. So when you click, maybe before you click, you have to use the plus button here and apply and open all these levels. So then you type. Okay, let me first of all delete all of them, maybe for clearer purposes. It have deleted. So here let's apply it once again. So you can see it is 20. The numbers you can type in sequential order or any form, but once you apply it in the chart, it will arrange itself in the sequential order. So don't bother about the one you are typing first before the order. So 30, 50, just type the numbers the same way I'm typing them, because it will assist you to understand and of course make proper use of the strategy the way I'm teaching you, or maybe the way I'm using it too. This is 70, this is 80, and let's delete this. So this is strong buy, strong buy level, that is the 20, buy level, that is the 30, waiting level, that is the very, 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 very important. That is the level 50. Then the sell level is the level 70, and then the strong sell level. Strong sell level is the level 80. So you can choose the peso which you want and of course choose your color. So but this is my preferred color. Then let's go back. Done. So you see how it looks. So here is what happens when the 10 and 20 moving average crosses above the before then, let's come down first and analyze the relative strength index before we apply it to the chart. The waiting level 50, as you can see here, used to act as a barrier between up and down trend. This is maybe your first time of hearing this. It's a secret of trading. So for those who don't know, you see the waiting level here, that is the level 50, is the weight level, and of course it acting as a barrier between the uptrend and of course downtrend. Even if the market is going sideways, you first of all know that it will be going in favor of whatever trend that was in place before the market started going sideways. It's very important you understand this, which means since Euro JPY, USD JPY was in downtrend, let's assume that it started sideways before continue with an uptrend, or maybe continue with the downtrend. You know that every spike will spike in favor of the downtrend. That's how it works. So always be very careful of this 50 waiting level of the relative strength index. So now, yesterday the market crossed, that is the 20 and the 10 and 20 moving averages crossed above the 34 moving average. So which means with the strategy, it indicates that the market seems to develop uptrend. So when you look at this place, the relative strength index also crossed from below 50 waiting level to above 50 waiting level. So I have to wait for it to retrace, like I told you in the previous video. Watch it. If you want to really understand this, you need to watch the previous video. I will attach the link under this video so that you will really understand what I'm analyzing here. So I waited for it to retrace and touch this 34 moving average. Remember, patience. Like I told you, it usually happens around 9 o'clock, 9 o'clock in the morning, sometimes 12, sometimes by 3:30, 4 o'clock in the evening, depending on the days of trading. So when it retraced, first thing I do wait is once it touches the 34 moving average, I wait for it to develop a bullish or bearish engulfing candle. That is in the case of downtrend or uptrend, before I make my entry. As you can see here, let me widen the chart so that you will take a look at the engulfing candle which I'm talking about. Look at it here. Immediately it developed a pin bar. The bullish engulfing candle developed. So, and I took my buy from here, as you can see in this place. So I took my buy and waited. So like I told you in the previous video, you need to watch it. It went up, came back and developed a W format. Like I told you in the previous video, in a case of downtrend, it's used to develop M format. So, and boom, it moved. And of course, hit the TP with all speed. So now what happens is, why it is also developing that W format, the relative strength index developed the same W format with it, as you can see here. So now, just like my advice in the previous video, when the relative strength index touches the level 70, which indicates a sell, You have to opt out of the market, except if you're a long time trader, you can choose to wait. But myself, once it touches or crosses above, and of course develop a high of the day, I opt out. So that is how I used to make the market on daily basis. So let's go back to the previous chart, which I used to, update the last video, and see how relative strength index work along with it. So this is where the trend started. That is where the 20 and 10 moving averages crossed below the 34 moving average. So you will see here the relative strength index also crossed below. And since the trend, of course, lasted for how many days? That is, this is the day 1, day 2, day 3, day 4, day 5, and of course, this is the day 6, which it reversed back. So all trends don't used to last to the same number, but my point here is, why the trend lasts, the relative strength index also lasts below the 50 weighting level. As you can see, from here, from this place, it has been below the 50 weighting level up till the 6th day when it crossed above the 50 weighting level. That the market also, the 34 and the 20 and 10 moving average also crossed above the 34 moving average, just like the chart also did. So this is how to trade it in line with the relative strength index. On daily basis, why the market developed the bearish engulfing candle, here is it, this candle, and this candlestick, it developed at least twice on the very first day of the trend. That is to indicate the strong sell. So you find out that before then, these two candlesticks retraced the market to the 34 moving average. And of course, the relative strength index also retraced to 50 weighting level. So this shows you immediately this bearish engulfing candle developed, you have to enter a sell from here. And of course, boom, you see how it will happen. So down here, you find out that where the relative strength index also crossed below the 30 weighting buy level, the market also developed the lowest of the day for that particular day. Now, during the retracement, the market was busy retracing. The relative strength index also was also retracing in line with the candlesticks. So immediately it got to the 34 moving average. The relative strength index also got to the 50 weighting level. Look at it here. So at once, the chart developed bearish engulfing candle. That is the flowing day. You enter yourself from here. This point. So this candle takes you down to this place. And of course, you find out the relative strength index crossed below the 30 weighting buy level of the relative strength index, which means you have to opt out of the market. So the flowing day, of course, the market retraced. The flowing day, the same thing happened. And this time around, one significant something you need to notice here is, in the previous day, the market did not retrace up to the 10 moving average, or maybe the 20 moving average. But in this case, on the same day, the market retraced to the 10 moving average. So that was why it spiked down automatically without retracement. in the flowing day. So it went down, and of course the candlestick, the relative strength index crossed below the buy level, and of course, as you can see, indicating the high of the day. If I were you, that's what I used to do. I opt out of the market if it did not hit my TP. You find out the market start retracing. The following day, the retracement continued until it got to the 34 moving average once again. And of course, the relative strength index got to the 50 moving average. That is, if I were you, I would be watching this relative strength index keenly. As you can see, sometimes the mount may go above the 50 waiting level, but it should not confuse you, because once the market reversed, it will reverse along with it, and of course indicate the end point with the 50 waiting level. So once you make your entry from here, the market boom comes down, and immediately it got to the highest of the lowest of the day. Of course, the relative strength index passed the buy level, the 30 buy level. So it's like that, and that is how to indicate, flow along with it until. But very, very important that you take your profit, because you don't know where the market is about to start reversing to the uptrend, just like you can see in the 6th day. So imagine if you did not take your profit when it got to the 30 buy level of the downtrend. So, and you did not take your profit, and boom, it took you back. Of course, it's going to, maybe if your stop loss is somewhere around here, it will of course take it off. So you'll be like, what happened? Whether the strategy failed you. So the most important thing is that this, in the case of downtrend, the 30 buy level of the relative strength index should serve as your take profit, whether you added the take profit or not. And of course, it's 70 sell level should also act as your take profit level. So using 1 hour chart, just like I advised, watch the previous video in order to understand this. So that is how it goes, and that's how they work together. And in the next video, I will be teaching you where you should be expecting a possible market reversal. That is where the trend is about to end. So as you can see in this place, the next video I will analyze it and show you a lot of it so that you understand it clearly. So if you scroll back, you will find out the same thing happened in every place that there is a trend. You can see here the market crossed above the waiting level. The relative strength index crossed above the waiting level here, and of course in the same point the 20 and 10 moving average crossed above the 34 moving average. So in the following day it retraced, and of course boom, it goes. The same way the relative strength index remained above the 50 waiting level until where the trend ended. Then it crossed back, and of course the market started going sideways. So you find out, like I told you earlier in the video, in the beginning of the video, the spike was going in favor of the uptrend because the market was uptrend before it started moving sideways, until the spike that is going to force it to downtrend. That is how it usually happens. So, but it is advised you should not trade along this line. It's very dangerous. So you should always wait for the trend to develop. And of course, if the trend did not develop in this particular currency pair, you go to another currency pair where you will find trend. But always use the strategy in a trend. That's the way to win the market on daily basis so easily. You can find the same thing here. You see, boom, it goes, crossed above, comes back, retraced, boom, it goes, comes back, retraced, boom, it goes. So follow the instructions strictly and trust me, you enjoy your trading experience. And like I apologized to you before, you like, share the video, and of course turn on the notification button so that you get the updates. There are a lot of strategies I have tried, I've used, and it was very, very interesting, so that you also gain from my experience and of course develop your own experience. Because Forex is all about learning on daily basis. As I am teaching you, I'm also finding a lot of things which I did not have taken time to notice. So see you in the next video, which will be coming up in no distance time, maybe in the next 2 days, maybe less than that. See you guys.